Your CNBC Edge now with Wendell Perkins, Chief Investment Officer of Optique Capital Management, and Drew Kanaly, Chairman of Kanaly Trust down in Houston. Drew? Drew?
Yep.
You down in Houston?
I am, Mark.
Okay. Unfortunately, you're not going to be home of a Super Bowl winner, but anyway, let's talk.
This year.
Let's talk about the market. What do you think? Is the worst over, or is this a bear market rally, or what?
Bear market rally. We got to wait on the Fed today, and they better go 50 basis points, or it's going to be an extended bear sell-off.
Okay. And Wendell, what do you think?
Yeah, well, clearly we're stuck in a bear market. And it's a matter of how long does it take to move out of this. We all think the Fed's going to cut 50 bips today. Most likely that's what we're going to see. And and probably will state that we'll continue to ratchet down rates until we start to see signs of an economic stability and recovery. That's a positive for this market out 3 to 6 months.
But Drew, you got to admit, if you look here, we get 50 basis points. You have 125 in a week, biggest stimulus ever. You got to buy now for what's going to benefit from the great flood of liquidity that's going to hit us at the end of the summer, right?
Well, no. I mean, you definitely are looking for a better second half, but you don't want to be fooling around with this market right now. It's time to be in cash and to be very cautious. You know, you had a nice GDP number in that inventories were taken down today, but it's still a slowing. And this market is looking for a slowing. It's going to overlook any good news, and it's just a bear market, so you just have to respect it.
But Wendell, it's interesting, when you look historically, it's coming into a slow growth period or a recession that stocks sell off.
Absolutely.
Once everybody accepts that's where you are, they actually usually go up.
That's why I'm not as pessimistic. I do think that we will see this market start to find a bottom over the next couple of months. It's going to be very volatile. It's going to be choppy. The news is going to be good and bad and good and bad. But in the end, we will come through this. And I think that there is, from an investor perspective, tremendous opportunities that are in the marketplace today if you can think out 1 year from now in terms of the return opportunity.
So what is the best one?
Well,
or the best one?
Yeah, I mean, I think not to lose sight of the fact that when we come out of a recession, the early cycle stocks are the place to go. Consumer discretionary stocks, as we all know, have been absolutely crushed. The financials have been absolutely crushed. These are the names that most likely are going to lead us out of this. And if you've noticed, what's been performing best over the last couple of weeks? Financials, consumer discretionary. It is getting the attention of the fact that the Fed is on top of this, and hopefully we have better times ahead.
Drew, I certainly see the logic of the bear argument, and I'll admit it is persuasive, but how do you get past the fact that market valuations are at levels where bear markets usually do not occur?
If you really want to look at the levels, you got to go back to 2001. We've had declining PE ratios going back to 2001. So we've been repricing risk for some time. Now we're repricing risk in real estate, and real estate spilled over into the rest of the market. And look, we're probably not going to hit a recession. That's the big difference here. But we are in a bear market, and that's the big difference. We probably aren't going to see a recession at all. It's just the market's going to discount that, and that's the only difference between what we're discussing today. It's going to be a good second half, but it's just going to be miserable getting there.
Okay. Drew Kanaly, thank you very much, sir, down in Big H. And, of course, Wendell Perkins here at the Big Board.